Well, after 2 straight days of losses, the Indian market absolutely came roaring back today. So the big question on everyone's mind is, was this just a one-day wonder, or is this the start of a brand new rally? We're going to break down this really powerful reversal and figure out what it means for your trading tomorrow.
Right, this is it. This is the question every single trader is asking themselves tonight. Was today's rally just a dead cat bounce, a temporary pop before another leg down, or is this the real deal? Is it actually time to start buying the dips? Let's get into the data and see what it's telling us.
Okay, so first, let's zoom out and look at the big picture. The market didn't just have a nice day. It snapped its losing streak with some serious conviction. This wasn't some minor gain. This was a pretty significant move that could totally reset the trend for the short term.
And here's the key takeaway from today. The whole sentiment, it's flipped. It feels like the bears have really lost their grip. The bulls came in and fiercely defended those key support levels, and because of that, the strategy now shifts from being cautious to actively looking to buy on any small drops.
Now, this rally wasn't random. It had some clear leaders. It was really powered by the big guns. I'm talking about the heavyweight banks and the energy stocks. But, and this is important, there is a lingering concern here. The IT sector is still lagging behind. We're definitely going to explore why that matters in a little bit.
So you might be wondering, what's behind all this bullish confidence? Well, it's not just a gut feeling. The charts actually gave us some very, very clear technical signals today.
The number one signal is what you're seeing right here, a classic bullish engulfing pattern on the Nifty 50 chart. Look, think of it like a tug of war. Yesterday, the sellers were winning. Today, the buyers not only showed up, but they completely overwhelmed all of yesterday's selling pressure. It's a really powerful sign that the control has shifted.
All right, these are the numbers that you're going to want to watch for tomorrow. For the Nifty, that key buy zone, that support is between 25,550 and 25,600. The first big hurdle on the upside is around 25,750. And for the Bank Nifty, the floor is right around 6,500, with that resistance to watch up at 61,400. These are the battlegrounds for the opening bell.
Okay, so let's go from that broad market view and drill down into some specific opportunities. I've got 5 stocks here that are showing some really significant potential, based not just on today's price action, but also, and this is crucial, on the derivatives data.
First up, we've got Torrent Pharma. Now, this stock isn't just kind of going along with the rally. It's showing some incredible strength all on its own. It's actually breaking out of its recent trading range. Now, here's where it gets really interesting. A price surge on high volume? That's great. But when you see a sharp rise in open interest at the same time, that's like seeing more and more players rush to join the winning team. It tells us that new, aggressive money is betting this rally is going to continue. That's what we call a long buildup. Next, let's take a look at a true market leader from today's session, one of the top gainers in the Nifty 50 itself, Power Grid. That white Maribozu candle you see there, that's the key takeaway. It's basically a candle with no wicks, which means the buyers were in complete control from the absolute open to the absolute close of the day. There was no hesitation, and that often signals there's more upside to come. Our third stock is Swiggy. Now, after a bit of a cool-off period, it is showing some really clear signs of a strong comeback. It looks like it's building some serious momentum here. And once again, the data totally backs it up. This jump of 3.5% in open interest, right alongside the price rise, well, it shows us that new money is flowing into the stock. Traders aren't just taking profits here, they're actually putting on new bets for the next leg up.
Any market rally needs a general to lead the charge, and today, there's no question that general was HDFC Bank.
The critical point to understand here is short covering. This is like pouring rocket fuel on a rally. It means all the traders who bet against the stock are getting squeezed. They're being forced to buy back their positions to cut their losses, and that buying action just pushes the price even higher, even faster.
All right, now for our final idea, and maybe the most interesting one. This is what we'd call a contrarian play. We're actually going to look for strength in a sector that's been pretty weak otherwise.
So this is a classic divergence play. While the rest of the IT pack is really struggling, the F&O data for Mphasis is telling a completely different story. A long buildup here suggests that the smart money, maybe large institutions, is betting specifically on this stock. Now, it's a bit riskier, for sure, but this is exactly the kind of data that can point you towards some hidden gems.
Okay, so we've analyzed the market, We've identified some interesting stocks. Let's pull all of this together into a clear, actionable game plan for tomorrow morning.
So here's the game plan. Step 1, watch the Nifty. See if it can hold above 25,650. Step 2, treat any dip back towards 25,600 as a potential buying opportunity. Step 3, keep your focus on the banks. They're the ones leading this rally. And step 4, and this is by far the most important rule, always manage your risk. Honestly, nothing else matters if you don't do that.
And of course, just a very quick reminder, this analysis is purely for educational purposes. Please make sure you do your own research and consult with a financial advisor before you make any investment decisions.
So the takeaway here is pretty clear. The technical patterns, the sector leadership, and the derivatives data, they are all pointing towards more upside. But as we all know, the market always has the final say. The real question is, are you prepared for whatever happens when that opening bell rings tomorrow?